Welcome to the Investor Download, the podcast about the themes driving markets and the economy now and in the future. I'm your host, David Brett. Welcome to the Investor Download. My name's David Brett, and joining me today is someone who's not only integral to the energy transition, but also the renewable deployment programme in the UK. He is Tom Glover, the UK country chair of RWE, the UK's largest power generator. RWE as a group is the second largest offshore wind operator developer globally, and plans to invest £15 billion in clean energy projects in the UK by 2030. Tom, welcome to the show.
Thank you.
Just for those who might not know you, can you just tell us a bit about your role with RWE?
Yeah, so I'm the most senior representative of RWE in the UK, and I represent all the operating companies externally and internally, making sure we've got a joined up UK strategy across all our technologies. So whether that be offshore wind, onshore wind, solar, biomass or gas, I cover the whole lot and try and make sure that we've got an integrated UK strategy.
Okay, so just a small purview then for you.
Yeah.
Okay, we've talked a bit about UK's clean energy ambitions. Just for those that might not know, what are the UK's clean energy ambitions?
Okay, so you've got in legislation, the economy needs to get to net zero by 2050. That's a legally binding target. Within that, the Committee on Climate Change, the government are all planning to try and get to a net zero electricity system by 2035. In reality, that's not a legal target, but that's pretty much where everybody's heading.
Mm-hmm. And everyone's on the same page?
Yeah, I mean, I think, I sit on Energy UK board, the kind of large UK representative company with most of the other CEOs from the UK energy industry. Yes, and everybody is actually aligned within the UK electricity sector. We all think it's doable, and we're all kind of heading that direction, subject to government support and public support.
I was going to say, because that's good to hear, bearing in mind some of the headlines we've certainly been hearing about recently.
So which headlines in particular?
So just the government maybe backing away from some of their...
I guess we've had, sort of climate change committee reports saying that there's been a bit of a lag or a bit of a slowdown in ambitions. We've had Zach Goldsmith, post his resignation, sort of levelling some criticism at the Sunak administration.
Yeah, I think it's clear that we're not getting the policies through that we want as fast as we want, and we'll go into more detail about the level of government support in certain areas. We continue to see progress, so I don't think it's all black, if you like, but certainly as an industry we'd like to go faster. We'd like to go faster on rollout of renewables. We've just had a period of some of the highest energy prices, and actually renewables and low carbon generation is the way through that. The more investment we get, the more access we get to low carbon, low cost generation. And so we kind of, as an industry, want to get on with it. And in a way, some of the policy stuff isn't fast enough, isn't clear enough, and isn't giving us that trajectory to get there faster.
Okay, and what's RWE's role in meeting those ambitions?
Yeah, so RWE, you mentioned before, we're the largest power generator in the UK, so we supply 15% of electricity. So, of course, we're kind of critical. So we need our 15% of electricity to be decarbonised. And we're doing that through the 15 billion you talked about. That's 15 billion in the UK by 2030 we're planning to invest. So that's a lot of capital to deploy, as a part of the hundreds of billions that we need to deploy. But our role is to do the offshore wind, to do the onshore wind, to do solar, one of the largest solar developers as well, but also to kind of decarbonise our current gas fleet.
Okay, so as we've already mentioned, going green and clean is going to require a huge amount of investment, both public and private, and not just in the UK. This is happening globally. So with that in mind, we've also got an investor on the show. You've already heard from him. He's Ashley Thomas, Schroders fund manager. Welcome again, Ashley.
Thank you.
How you doing?
Yeah, very well, thank you.
What's exciting you about these clean energy ambitions?
Well, I think if we look globally, and if we take the IEA figures, they're suggesting that going forward, post 2035, over $1 trillion of investment will be required to be directed to renewable deployment, and actually an equal amount to support that, to enable the deployment of renewable generation on the grids, networks, EV side. And that decarbonisation of the power sector enables a decarbonisation of the transport sector and longer term a decarbonisation of the heating sector. So, it enables a true decarbonisation of the energy sector. And that level of investment means that the growth outlook for a number of these companies is dramatically different than it has been in the past. In the past, some of these utilities may have been growing by 1 to 3% per annum, and now actually looking forward, on a multi-decade basis, the growth trajectory is potentially double digit.
Yeah, huge opportunity. Okay, so as Ashley was mentioning, we're facing a future where many countries, through commitments from governments and corporates, that we need to decarbonise rapidly. A big part of that process is generating power from clean and renewable sources. RWE plans to more than double the UK's offshore wind power by 2030. Tom, you've stated that you see sufficient network capacity and timely grid connections as the number one barrier to deploying low carbon generation, and class 2023 as a make or break year to overhaul the regulatory framework. So what are the issues as you see them?
Yeah, I mean, I should be clear, I don't think it's just me that thinks that. I think maybe I started the story a little bit earlier than most, but I think almost everybody in the UK now agrees it's the number one barrier. And if you just look at the pipeline on everybody's projects, we're looking at 3 to 5 years delay on almost all projects, whether that be solar, CCUS or offshore, purely because of grid deployment. So that's 3 to 5 years you're waiting for those billions of pounds of investment, you're waiting for those lower power prices, you're waiting to decarbonise. So really that is a problem. And I think, there has been some progress. So we have seen the government now spending time in it. We've seen the ESO, so the Electricity System Operator, do its 5-point plan. And we welcome a lot of that, but it still doesn't seem fast enough. We also need more transparency of what's going on the grid. We need more commercial solutions about how to tackle the grid. We need more planning reform. We need to resource the agencies that are looking after it, because we've got these plans, but it's simply not enough. And there's already reports out saying the latest anticipatory investment, which is the extra projects that Ofgem have accelerated, which we fully support, is still not enough to get rid of the constraints in places like Scotland and East Anglia.
And how do you see all those changes being implemented? Is it just a case of more investment, employing more people?
Now, I think it has to start. It starts with the government and it starts with messaging that the decarbonisation is the challenge of our age and getting to the climate change. We do have to take compromises, so we have to accept we're going to need to build some stuff, whether that be wires or wind farms or solar farms. So we need to get the public to understand it's better to build that stuff than have climate change. That's kind of like the kind of political messaging. That will enable us then to do the planning reform and allow us to basically get better planning rules to enable us to build more wires and do more wind farms, do more solar farms. And then when you've got that kind of sorted, then we need the government framework and the market framework to keep on going so we can roll it out economically so that it's not only economic for us to invest, it's also cheap for the consumers.
Sounds very sensible and simple, but for some reason that's not happening at the moment.
No, it's not. And I think it starts sometimes with politics and general public. I think most people now, the vast majority of people understand the need to address climate change, but they don't necessarily think it should be done in their backyard. So that is a little bit of a difference and you need kind of engagement of politicians in that discussion, that honest messaging that you can't have everything. So I think that isn't happening. It's also not happening. There's a lot of discussion. There's a lot of bodies involved to get this sorted out. And in order to really do it, you need to make it your number one priority. And it's not clear that it's the government's number one priority at the moment. Is there
a concern that with an election on the horizon, it will fade into the background again because there's other more pressing matters to win an election?
I hope the public think this is a very pressing matter, but there are other issues. We've got a whole affordability crisis in the UK, and we have to understand that's more pressing for individuals to here and now. Therefore, I think it's for political parties to take leadership on this. I think the general election has a concern because there'll probably be like 12 months where no policies and legislation happens. And if you've got only 12 years to get to net zero electricity sector and it takes 10 years to build anything, it's what I said about, this year is key because 2024 feels like a bit of a dead policy year because we're going to be in general election. So whatever we don't get done in 2023, I am a little bit worried we lose a year. And it's just not good enough to lose a year at this point. I
just sort of touch, sort of planning obviously has been a component, but it's potentially not the only component. If I look at the Eastern Link, EGL2, I don't think that really had material planning issues, but was initially proposed back in 2016 and only received sort of Ofgem regulatory approval last December. So, sort of, is there also an issue, with the regulator accepting that investment needs to go in advance, anticipatory investment?
Anticipatory investment, yeah. So if you'd asked me that 2 years ago, I would have said 100% yes, and I was busy going everywhere saying we need to do more anticipatory investment. There has been progress on this. There's the extra projects that the Ofgem has approved under the so-called ASTI process. So they have accelerated. Is it enough? Probably not. But I think we have to recognise there has been progress in that area. The industry would like it to go further and faster. And there is that thing that basically there's so many studies now available that building grid is almost a no-brainer, right? Because almost every study says building grid is much better than constraint costs. So actually, the way I always put it, it's really simple. I kind of go, you did broadband. When we did broadband, we decided everybody wants to get ultra fast. We didn't look at individuals and go, Mrs. Smith's 80, she's not going to use it. We just went, right, we're going to give everybody ultra fast. Well, broadband and that technology is only good if you've got good electricity systems. And so the electricity system is the underpinning of the whole economy. And so really we should basically think about like broadband and just say we want ultra high capacity network everywhere. And I think that's probably going to be pretty much a no regrets option. So a bit more balance now, I think. Often we've done well, but even better if. Yeah,
that's fair.
Tom, you mentioned there the decade-long wait to connect these low-carbon projects to the electricity grid. The watchdog for Great Britain, the energy watchdog for Great Britain, labelled it unacceptable, and that's amid tensions over a blame game for a mounting backlog of green power projects. Ofgem estimated that up to 70% of high-voltage transmission schemes never connect to the grid, which sounds incredible, and it found more than half of those projects in the queue had to wait 5 years or more to be offered a connection date, which seems like a huge waste. How should we address that issue?
Yeah, so there is over 300 gigawatts of projects in the queue, and even in the most ambitious growth estimate of electrification, that seems a little bit too much.
Can you just put that into perspective, what 300 gigawatts means?
Yeah, so current peak demand in the UK is about 50 to 55 gigawatts, depending on the year, and you've got 300 gigawatts of stuff in the queue, right? And there's probably, 80 gigawatts of installed capacity on the system currently. We are going to see, depending on whose estimates you believe, doubling or tripling of electricity demand. So there is a requirement, and also the capacity is slightly different. So if you've got a gas station and it's a gigawatt, at peak demand it's going to do a gigawatt. If you've got a solar power station, you don't know it's going to do a gigawatt. So they're not quite comparable. So, but I think more than 70% of that will less than 70% will get delayed and not get delivered, because a lot of those projects are required. And I think you've got to look at it slightly differently from a system that we're looking at now, which is a lot more smaller projects versus what we used to have, which was a lot of large projects. And I think they're right. If I go back 10 years and I look at how many gigawatts of CCGTs there were and they didn't get built, had you built a network for that, you would have wasted a lot of consumer money. Nowadays, I think it's so distributed, the renewable, that I think that's much lesser risk. In terms of sorting that, under that 300 gigawatts, and within that, there's good projects, there's what we call queue blocking projects, and there's kind of dead projects, and there's not really that much incentive to come out of the queue. So we welcome the ESOs. As part of their 5-point plan, they're going to put in a process to basically reorder the queue. So basically, if your project is not continuing fast enough, you could get shifted in the queue. In principle, we think that's a great idea. I think the devil's going to be in the detail, right? If they shift the wrong projects, there's good reasons why some projects get delayed. If I look at our solar projects, for example, and maybe going back to planning, town and country planning, it's supposed to be a statutory process. Over 90% of our projects, the town and country planning aren't meeting their own statutory deadlines. So if that was the statutory deadline put in the process of the ESO, we would start losing projects through no control of our own. So we have to be careful about that. But in principle, it's a good idea, and we look forward to working with the ESO to sort that out. We've also been calling for is, to be honest, money talks. I'm glad I'm speaking with Schroders as well here, because the best person to determine whether a project is good or not is the person who owns the project. They know whether it's a good project. They know if it's in a windy location. They know whether it's big enough to get to low capital. And so they know how much they're prepared to pay to keep that project going. So we would call for higher and earlier liabilities for grid, to self-sort the queue. But we would also look at like a more commercial approach and, can you buy or sell or trade grid connection in the queue? So we'd look at that. And also we would think we should look more option at like sharing connections. So a good example, if I've got a CCGT like I have, on a sunny day, now it's unlikely to be running because you've got plenty of solar, but I've got a firm grid capacity to export it all. If I shared that with a solar plant, I could like optimize between the two. And it may be some instances where they both can't export, but commercially I can sort that. So I think we need a more commercial approach as well. So there's a lot of stuff to do, right? There's planning, there's more investment, there's sorting out the queue, but I think then we need to also move to the monetary side of it.
Okay, you mentioned the ESO plan there. How feasible do you think that is?
Yeah, I think it's feasible.
Yeah.
I think the devil's in the detail, and the industry will work through with them. I think they started with what they called the queue amnesty, which was you could give back your connections for free. But the problem is not many people took that up because there was not really a financial incentive to do it. I remember in my own business, the guys go, no, it's great, they're going to do it. And then I said, how many are we going to give back? And they said none. And I was like, okay, I think I know what the outcome of this is going to be. So I think they've now moved to this 5-point plan. I think working with them on that queue could be really good. But we just keep on going, right? Keep on refining it.
When we talk about connections, just in layman's terms, we literally talk about like a business here literally plugging into a grid.
Yeah, so basically a connection is simply, so we'll have a project site, and effectively what we need is the right to export electricity to a substation.
Yeah, sure.
So a connection is, you can connect to this substation at this date for this many megawatts. That's it.
And in terms of potentially moving to a more sort of commercial approach and potentially being able to trade connections and your place in the queue, should there not also be some sort of societal needs sort of assessment in terms of if it's purely commercial, perhaps we'll just end up with generation and data centres and perhaps housing projects, large housing projects that do also need grid connections, may not have the same ability to have that same level of financial payment.
I think there is a societal need for grid investment already. So as part of the network options assessment that Ofgem do, they are basically looking at the level of constraints on the system, and if the constraint costs are greater than the grid, then they invest in the grid. So that's the overall societal, making sure we're not doing grid investments that are not required. So in a way, that's that. I mean, I think your example. I mean, I would love a housing estate to be within my grid area, right? Because it's a demand sink, not a generation sink. So the more demand you have, the more generation I can connect. So it's kind of two different things. They're not competing, generation and demand. They actually help each other.
But a data centre versus a housing project they're both demand connections.
Yeah.
And it could just be that a housing project may not have the same ability to put in the financial payment to get advanced connection.
Yeah, I think it's fair. It's a reasonable point. I think we kind of, does economic value kind of go back to societal benefit? Because if that battery is worth so much, it's providing a reduction in power to the consumers. So I think it's a difficult discussion.
On Apple Podcasts, Spotify, or wherever you get your podcasts, you're listening to the Investor Download.
Speaking a lot about the UK, I mean, how do we compare to the rest of the world, perhaps the US or Europe in terms of this?
Yeah, so again, 1 or 2 years ago, we kind of put the UK as best in class, the best place to put RWE investment. I would say it's gradually moving down the table. It's still top table. It's a great place to invest the UK generally in terms of investment rating, say, a place to do business, regulatory framework, principle of grandfathering, etc. So it's generally a great place to do business. It's just going down the table a little bit. And that's a combination of a few things. There's a lot of government interventions like the electricity generators levy, things in the energy bill that hang over our business, the uncertainty about future legislation and policy through the review of electricity market arrangements. These are all uncertainties that sit in our business. Meanwhile, the kind of like the competitors, so under the EU Green Deal, under the Inflation Reduction Act in the USA, they're giving more and more incentive to go. And it is a global competition because the supply chain is squeezed. So there's only so many places you can do a substation or build a turbine or build a blade. And so people will go to the best market. At RWE, so far it hasn't changed our investment plans, but each investment is getting slightly harder. Does that make sense?
Yeah, absolutely. We're going to go into the weeds a little bit here, so we're going to start talking about contracts for differences, which is a scheme which is the government's main mechanism for supporting the low carbon electricity generation. Just for those who might know, what's their purpose? What's the purpose of the contracts for difference?
Yes, they were originally put in place in order to give the investors in generation assets certainty over their revenues. So basically, it's like a fixed price contract, for the front 15 years of a renewable asset. So it gives that investor certainty. In reality, it also has another benefit, which it gives the consumer certainty about the price they're going to pay for that electricity. So that's the purpose. It makes it investable. If you make it investable with a fixed price interest, the cost of capital goes down, means that basically you're deploying renewables for cheaper.
And that fixed price obviously produced benefit last year when we saw a material increase in wholesale power prices as a result of Ukraine.
This talked about, in the main 12 months, those CFD generators paid back over £660 million to the UK government. And that obviously went back to the electricity consumers, which reduced their bills.
Okay, so we're going to shortly have the results of the latest auction that's just been gone on. Does RWE have many projects in that auction?
Okay, so the auction hasn't yet gone on. It's going to be in August. So we do have a number of projects in that, which I can't, because of competitive, I can't tell you how many. We have a number of solar and onshore wind projects in there. We don't have any offshore projects eligible to bid in this auction.
In the previous auction, there's been a few developers that have been struggling to progress. Do you think the government's recognised that, and will that be reflected in the next auction?
No. In summary, look, we have seen an increase in project costs of somewhere between 20 and 40%, driven by a variety of factors, whether that be inflation, whether it be commodity prices, supply chain prices, general unavailability. The fact that a lot of the OEMs aren't making money and therefore need to at some point start making money. So we have seen that 20 to 40% increase. We've actually seen a reduction in what's called the administered strike price, or the maximum price you can bid in offshore wind. So the two things don't match. The industry has been very vocal to the government about this and said, this is a problem, and we do not expect as many offshore projects as we would like clearing in this auction round. And that's not good for the offshore wind industry, because if you want to build a supply chain and you want to build confidence of investors, you want to keep that pipeline going. So you want to have a steady increase of offshore winds, not starts and stops. So no, bluntly, I don't think the government have taken it into account. I think there's an element, that they maybe do not believe what the developers are saying. And I suppose then the proof comes in the pudding, right? I may also be wrong about what people may bid into the auction with offshore projects. From our internal information, we don't think we are, but you never know. But I think when the AR5 results come out, the big question is going to be how many of the offshore projects, if any, got contracts. And it's not a success for the government to say, well, we've filled our total megawatts with solar and onshore, because we need offshore, a booming offshore business to deliver net zero.
So do you think the government just thinks the developers are making excuses?
I think there's potentially for that, yes, and the government needs to protect the consumer costs and make sure they don't overpay for anything. But I think it's a little bit of a different way of looking at it. So they're looking at it wanting always a reduction in costs when the global supply chain is going up. As industry, we look at it and say it's absolutely clear solar, onshore and offshore is the cheapest way to produce electricity in this country, and we need it to deliver net zero. So really you should just build as much as possible, as fast as possible, and you will reduce consumer bills in the long term. There's lots of figures out there about how much it has cost consumers through delaying previous renewables from previous administrations in the last winter. I don't know the numbers to heart, but it's very clear evidence we should roll out more renewables.
And if the government does want to positively respond, sort of, do we have to wait another 12 months for the next auction round, or could there be measures in the autumn statement with regard to capital allowances that could potentially help?
Well, I mean, I think the problem is people are going to be bidding into this auction based on the current, framework of tax reliefs and everything else. And if they haven't got a contract, they haven't got a contract.
Yeah.
And so therefore, the next round, really, whenever that may be, which is probably about a year's time, is the point at which we can correct it. But you're going to end up with issues, right? Because if you stop many gigawatts this summer, even more gigawatts of projects goes into the next period. And that has two problems. One is the budgets probably won't be big enough. But second of all, supply chain can't stop and then double. It has to be a smooth, so people will probably struggle to get sufficient supply chain.
No.
You mentioned the costs already. We mentioned the strike price. Can you just give a bit of colour as to what the strike price was the last time around, what you expected to be this time around, and what you think it actually should be? Because you're talking about there might be a little bit of difference too.
Yeah, so I'm not going to speculate what it should be. We don't have a project in there. It should be higher than the administered strike price. So the administered strike price now, so in the last auction for offshore wind, was £46 a megawatt hour. Now it's a bit confusing. That's 2012 money, right? So
yeah.
Don't ask me why we still use 2012 money, but anyway, we still use 2012 money in the electricity industry for some reason. So it's £46, that's reduced to £44. The lowest price is pretty much clear for an offshore wind farm, I think it was about £39. Yeah, so if you take 20 to 40% increase on the £39, it gets you somewhere in the region of the high 40s, early 50s maybe, is where it probably needs to be, but it's very difficult, it's project by project. Yeah. etc., but it's quite significantly more than the current ceiling price.
Get in touch with us by email at schroderspodcasts@schroders.com or visit our website, schroders.com/the investor download.
The levelised cost of energy, which is a metric used to estimate the average cost of generating a unit of electricity over the lifetime of a power plant. Have we seen the bottom in that cost of energy for offshore wind?
I think that's difficult to say. I think we're currently seeing a squeeze in supply chain. And you have to be quite an economist to work out what over time the cost of steel is going to be, the cost of energy, etc. So we're currently seeing an increase. Mm-hmm. We're very innovative in the sector. We've got a track record of reducing the cost. It's a third of what it was when we started the industry. So I would never say it's at the lowest. Mm-hmm. I think what's clear is it's going up a bit now because of global circumstances. But that's no different than any technology. Any technology we're deploying now, whether that be new CCS, whether it be solar or onshore, it's all going up.
Yeah.
The cost of everything's going up. The cost of your Mars bar is going up. So I think this is I think you have to have a crystal ball to work out, is it going to go down again?
But in terms of innovation and turbine size, have we now got to a stage where perhaps the pace of innovation or cost reduction?
I think there's a point. So people are talking about the 21 megawatt turbines, which are are huge. Currently, we're talking about deploying 14 megawatts. So we keep on going. I do wonder whether there's a point at which, in order to get, and this is the $1 billion question, more than $1 billion question, there's a point at which standardising more and keeping at a certain size so that all your vessels, all your substations are standardised may bring the cost down more than going from 21 to 22, for example, right? And I think that's what all the clever engineers, hundreds of clever engineers, work on in our industry to work out how to drive down those costs. Is it through getting bigger and bigger and bigger? Or is it through standardisation? And there's always a trade-off there.
Is the inflation within your sector similar, as in the same factors hurting your sector like they're hurting the rest of the economy? Well,
no. I mean, I think they're slightly different. So one of the good things about the contract are different. We actually got inflation protection. So if you remember, I said it was 2012 prices. Yeah. We actually have inflation index. So if our inflation was the same as the rest of the industry, we would actually be fine.
Yeah.
Yeah. The problem is it's actually much larger. So I talk about 20 to 40% in the last 2 years. And that's the problem is it's the other thing, it's the supply chain, it's the materials. That is going up much faster than the general inflation in the economy.
Yeah, gotcha. Early this year, you said that UK was the best market to invest in low carbon technology and is no longer. Well, why is that?
I think it's kind of what I was saying before. So it still remains an attractive investment. We've had various overhangs. So we've had the electricity generator levy, which is, it gives people a lack of confidence that in that. So we've had a 10-year period of low prices. As soon as the high price comes, then some of that's taken away. I think you've got to look over the whole period. That gives investors some worry that whenever the prices are good, we get the profits taken away, but we'll never obviously have the opposite when it's low. So that's kind of one. We've got various things in the energy bill which hang over the industry. I won't go into the technical detail, but there's some horrible things in there. We've got the policy uncertainty. So we've got this whole review of electricity market arrangements, which has some fundamental potential changes, which makes it very difficult to work out what the price of electricity could be in 10 years' time. Very difficult when you're doing your investor cases. And then the final bit is what other people are doing. So if other people make the market more attractive, then you do think about reallocating capital to those markets.
Yeah, I was going to ask, have you seen much investment going out to other countries?
Yeah, I mean, absolutely. I mean, in RWE, we've doubled the size of our US business. Yeah, so we are putting a lot more capital into the US. Luckily, we're not short of capital at the moment, so I haven't had the phone call off our CEO that says, Tom, you can have less UK capital. But at some point it may come, right? If you don't have an attractive market, RWE Group operates in 20 countries worldwide, and quite rightly, we will allocate our capital to the best performing markets.
Well, you just mentioned there's been a review of the electricity market arrangements. Can you just give a brief overview of what's going on and why it needs restructuring?
Yeah, so what the government are doing at the very high level is basically reviewing whether the electricity market is suitable for a very high proportion of its generators to be low carbon distributed, etc. Right? So fundamentally, that's a good idea, right? We need to sense check whether or not we're doing all this investment, whether we've got a market that works. So I think we kind of all agree with that. I think then what they're proposing is quite a range of potential interventions and changes to policy, from a green power pool, so a pool just for renewable generators, to locational marginal pricing, which is you get a different price for every node on the system.
Oh, wow.
To just some more what I would call evolutionary type stuff, which is we're going to tweak the CFD we talked about a little bit. So I think there's a whole range of stuff on the table. And the problem is we're now more than a year into the process, and really none of the options are taken off the table. So when you're doing an investment, as you guys know, you this whole range of possible outcomes. And when I do my investment, I've got to potentially think about what the range could be, which is not great. It increases your cost of capital, increases the distribution of your low and high case, which never makes it easy to invest.
Well, I was going to ask what concerns you about those proposals, but I guess there's probably too many of them at the moment.
Well, I think you can the two biggies that there's a whole industry debate about. So one is this locational marginal pricing or nodal pricing. So this is the idea that you resolve transmission constraints by having a different price at every point on the system. And this is a market that's established in quite a lot of the US markets. I mean, for us, it's massively complicated. It would take 5 to 9 years to implement when we're trying to anyway just deploy renewable. It gives massive investor uncertainty. So we don't support it. We don't see the case for it. We see an academic case for it. It's very simple. If you optimize something over more nodes, you'll get a better outcome. I'm sure we all can do that simple understanding. But the problem is it doesn't take into account the delay in deployment of renewables while we all worry about it. It doesn't take into account the transfer of risk to generators. It doesn't take into account the increased cost of capital. And when you take all in that into account, it's marginal at best, if not negative as a business case. And with all that taken into account, do you really want the industry to be focused on this big, complicated intervention, or do you want us to keep on addressing the fundamental issue, which is we need to decarbonise the electricity system? And to do that, you just need to deploy a lot of capital quickly. So that's the locational marginal pricing.
And on locational pricing, obviously Ofgem has commissioned a study, the FTI Catapult study. I think they identified potentially 25 billion of net consumer benefit. But as you say, sort of that requires around a third of the offshore wind deployment to be in different areas than is currently planned. And in terms of the cost of capital, they didn't really incorporate that, but in terms of their sensitivity, they only applied it to certain areas. And I think the 50 bips in certain, I think on merchant and CFD, eliminates around 8 billion of that consumer benefit. So actually, if you sort of increase the range of investor uncertainty or company uncertainty, given the volatility in both the planning and the power price assumptions, that consumer benefit can easily be eroded.
And what the big problem we've got is modelling this and working out the financial benefit is really, really complicated. And FTI have done a good job, right? But other people are also doing it, Baringa and Aurora, and coming up with quite different results, right? So that's number one, is it's really sensitive to your assumptions about how can things move. And what we believe as a company is most of what we deploy is there because it's windy, or because we've got a lease, or because there's a hydrogen demand, not because of where the grid charges are, right? So actually we think they overestimate how much will actually move. I think your point on the cost of capital is really clear. The last report I saw, you needed only on their perfect optimization, if you had an 138 basis point increase in cost of capital, the whole benefit was wiped out. Yeah. And their view is that's not a realistic increase in cost of capital. I can tell you that RWE's projects in Texas, we quite often see 50 to 150 basis points increase in cost of capital when we're selling something for a nodal project. We also commissioned some work by Frontier Economics that showed 200 to 300 is not unrealistic. So we're somewhere between 0 and 300, the middle is 150, and that wipes out all benefit. And I think this is the problem. I think the other thing is, Aurora and Baringa will hopefully release, and AFRI, I think, are going to release some independent reports about this. And, it's like an academic modelling debate, right, where you get so many academics in the room that they'll all come up with slightly different answers. But I think one of the problems, if I'm going to criticise it a little bit, is the ESO and Ofgem, who are recommending locational marginal pricing, they both use the same consultancy. So they're both marking their own homework. I think it would have been a much more rigorous approach by the regulator had they used an independent person to challenge the FTI modelling. Albeit, from what we can see, FTI have done a good model, but it's just so many complicated inputs. You can almost by making up the inputs, you can make up the outputs, and this is our problem.
And it's only a review at the moment, but is this uncertainty actually impacting, physical plans at this stage?
Absolutely. If you take it really simply, right, when an investment comes across my desk for a UK asset or across my other board members' desks, we have the CFD element, right? But then we have to say, what are the prices after the CFD finishes? And how do I work that out, whether I don't know whether I've got a national price or a nodal price? So that makes you think, I don't want that risk. So what we're seeing is a lot of merchant investments that were not doing CFDs are now saying, I just want a CFD because it's just too uncertain what my merchant price is going to be. And so this is increasing and making people nervous. And the problem you've got is we're not expecting any narrowing of options until October, and then we're potentially in an election cycle. So when are we going to make decisions on this, like 2025, 2026? And then you've got this 3 years of delay, whereas we're calling and saying, look, we believe that things do need to evolve. We always need to improve. We can always improve. But you don't normally improve something by throwing everything out and starting again. You normally do it in some kind of evolution, and you say, well, that bit's the bit that's broken. Let's fix that bit, and let's do it more slowly and gradually, which gives investor confidence and doesn't really mess around with a big change and then find out later it didn't work.
And Ash, I guess you're keeping a close eye on all these developments.
Well, no, I certainly agree with the issue of sort of uncertainty feeding through to cost of capital. Particularly with nodal, but even zonal, and obviously, we do have the systems in place in the States or sort of New Zealand, Australia. But even in Sweden, where we have a sort of only sort of 4 zonal market, there's dramatic difference in power prices and a much higher degree of volatility within those zones. Yeah.
That's right. And then, the other thing that our big concern about REMA is this so-called green power pool. So this is when you have a separate market for renewables. And for us, the main problem with that is you have to determine somehow what price renewables are going to get. So it has to be some kind of administered or auction price. And again, it just gives that uncertainty about what price am I going to get for my product. Yeah. So it's quite simple, just how does it work? What price do I get? And then how do I do an investment?
Well, as soon as we're on pricing, do you think there should be split pricing between clean and dirty energy?
No, I don't. I think it's nonsense, to be honest, because if you want to optimize something, you need to know what the marginal price is. Right? If you have a split price, you don't know what is the value of turning something down or turning something up. So you have to in the dispatch side of it, you have to have the marginal pricing, and hopefully no economist would disagree with me that you have to do that. Now, what you can do, which is what a CFD does, is protect consumers off any volatile pricing. So that's what I would call a financially split market. So if you gave all renewable CFDs, then they're protected from the investor perspective, so they can get their cost of capital down, and the consumer is protected. You don't need to kind of have two completely separate markets.
Okay, after the subsidy period is finished, how should renewables be remunerated?
So my view is there should be one market. Ultimately, you want renewables to displace gas stations.
Yeah.
The best thing you can give them is if you say the gas price is high and they're getting a marginal gas price, the renewable investors are going to see that, and they're going to build loads of renewables until that gas plant is no longer at the margin. That's simple economics. If you don't show them that high price, then they're going to look for somebody else, i.e. the government, for some administered price.
Yeah. So what sets the price? Is it the price of gas? Or?
So it depends on the period. So we have periods of negative prices when it's renewables setting the price, and nobody gets any money, and we have periods of high demand, low wind, low solar, when gas sets the price. And I think that's a functional market, because what you want is you also want demand to respond to that. So if when prices were £500, I want industrials to turn down if it's not economic to make their product. That's an efficient market. If they were only exposed to renewable prices, they'll never turn off.
Should there be greater incentives for people to start building closer to where the power source is?
Yeah, I mean, there already is incentives. Yeah. So, we talk about locational margin prices. We've already got something called the transmission network use of system charges, which basically means that you get charged a lot more if you build a wind farm in Scotland versus a lot less if you put it in London. So you already have this mechanism, and it's quite a material mechanism. You're talking about £20 a kilowatt per year difference. It's quite material to locate it near a demand. Yeah. Now, in reality, there's a lot of decisions made on that. So when you look where the coal stations closed first and where the gas stations were put, that was quite influenced by that system. So it is a good system. The main problem you've got at the moment is ultimately we can only build offshore wind where we're given leases. So in a way, it doesn't so much matter where your tenuous is. So if you want to move, and this is why locational marginal pricing won't change where your offshore wind is. If you want to put your offshore wind somewhere, you have to give leases in different places.
Okay. Well, you'll be pleased to know we're on the final section. So this is the Climate Change Committee in their 2035 modelling suggests all but 1/3 of gas-fired power should be basically phased out, even then rarely generated. You still roughly have 20%, I think, of gas-fired power generation capacity in the UK. So what are your plans with regards to your gas fleet?
Yeah, I mean, we're the largest gas generator by quite a while, so we've got over 7 gigawatts of gas fleet. And we have a very structured plan. So obviously we understand where we need to get to, and basically we've got a plan per power station about what we may want to do, and there is the kind of three options that you talk about. One is, unfortunately, some of them may need to close, hopefully not. Some of them will get either hydrogen fired or will get CCS, so basically become decarbonised, and some of them will run at extremely low load factors so we can still get to net zero. And at the moment, it's a little bit too early to determine. We've got pilot projects and feed studies going on hydrogen and CCUS at a number of projects, a number of sites. We've also got a potential new build with CCUS, so we're looking at it. We're also working very strongly with the government around their support mechanisms for those processes, because they are more expensive than unabated gas, and so therefore you will need some support in order to do these decarbonisations. So we've got a great portfolio. We've got absolutely fantastic engineers within RWE, so we're very clear we can deliver the technical solutions, but it's a bit too early to say what actually is going to happen with the portfolio, apart from we've got loads of options, and now we've got a really exciting but difficult job to kind of work out which one to take.
I should say CCS, just for those who don't know, carbon capture and storage.
That's right, yeah.
How practical or economic is it to convert some of those gas plants?
So in terms of technicalities, we're absolutely convinced we can do it technically. We're going through very early stage feed studies on both Pembroke and Staythorpe at the moment, which are our two biggest CCGTs, so I should say, to work out the costs, the practicalities. And we're actually doing, at Pembroke, for example, we're looking at hydrogen firing, and we're also looking at combined carbon capture. And then we're doing the full detailed plant layout and the initial costs So effectively, we can answer that question. So the answer is, I don't know yet. We're working through that. I think within 6 to 12 months, we'll know the answer. And then we'll basically decide, is it best to go on hydrogen? Is it best to go on carbon capture, or a combination of them both? And then effectively, we'll need to meet the business case, the government, that it makes sense for the consumers that we do that.
Okay, final question. What are the pros and cons of hydrogen and carbon capture?
Oh, gosh. Well, I mean...
The headlines.
So very simply, green hydrogen, you shouldn't be burning that in a power station, right? So you're talking about blue hydrogen in a power station. In order to do blue hydrogen, you anyway need to do carbon capture and storage. So they're kind of linked. So in reality, for carbon capture and storage, you either need it on the back of the power station, or you need it on actually pre-combustion via blue hydrogen. So you need to get carbon capture and storage to work under either model. And then effectively, the two main differences are, if you've got a dedicated carbon capture on the back of a CCGT, it can only do the carbon on the back of your CCGT. So you kind of like run base load or run quite high load factors, and that probably makes sense. If you want a more flexible asset, what you probably want to do is put your gas station near an industrial demand, and effectively then the blue hydrogen can either go into the industrial demand or go into the power station, and effectively at very high prices, it makes sense the industrial demand turns down and you put on your power station. So you can flex where the low carbon. And that's the main fundamental difference is very low load factor, you probably want to go to blue hydrogen. Higher load factors, you probably want to go to carbon capture. But that's very, very general. Don't hold me to it. It's very early stages of the technical development.
Well, Tom, it seems like you've got a huge amount on your plate, so we'll let you go. Thank you so much for joining us. It's been a thoroughly engaging conversation.
Thank you very much for having me.
Cheers. And Ashley as well.
Yeah,
Thank you.
Ashley.
Thank you. Well, that was the show. We very much hope you enjoyed it. If you want to find out more, please head to schroders.com/insights. And we're endeavouring to record as many of these shows in the studio on video. If you want to watch them in their full unabridged version, then go to Schroders' YouTube channel. If you want to get in touch with us, it's schroderspodcast@schroders.com. And remember, you can listen, subscribe and review the Investor Download wherever you get your podcasts. New shows drop every Thursday at 5 p.m. UK time. But above all, keep safe and go well. Cheers.
The value of investments and the income from them may go down as well as up, and investors may not get back the amounts originally invested. Past performance is not a guide to future performance. The information is not an offer, solicitation, or recommendation of any funds, services, or products, or to adopt any investment strategy.